Hey everyone, this is Nick Iverson, Enrolled Agent with Elevation Tax Group. As we approach the end of the year, I wanted to provide you all with some common year-end tax planning tips and potential strategies. First, I want to talk about best year-end practices for small businesses. Then I want to talk about some personal year-end tax tips. So let's go ahead and start with the business. The first tip for small business owners is to make sure that your books are current, meaning all of your business transactions have been reconciled and are represented in financial statements. I recommend you generate an income statement, a balance sheet, and a statement of cash flows for starters. Understanding what you have taken in and what you have spent will put you in a good position to make sound end-of-the-year decisions. The second tip is to speak with your tax advisor before the year closes. You may receive advice on how to save taxes that requires action before year end. Waiting until it's time to file your taxes may take some tax-saving strategies off the table for you, such as incurring certain necessary expenses before the close of the year. The third tip is to consider your business structure. If you plan on changing from a sole proprietorship to an LLC or a corporation, now is the time. You can significantly simplify your record keeping and your tax reporting requirements by starting the new year as the new business structure, or rather starting the new business structure effective as of the first day of the new year. Did you know that you can file the appropriate state and federal paperwork now in December and mark it to be effective as of January 1st? The fourth tip applies to anyone with a business that has become inactive. If you started a business that you are not continuing, various government agencies may think the business is still active and may be expecting a tax return or annual fees and reporting. Dissolve the business by the end of the year to avoid incurring future penalties and fees. The fifth tip is to revisit your pricing model. Once you have looked at your financial statements and understand the business's financial picture, you can determine if your pricing model is adequately compensating you for your time, for your work, and for your necessary expenses. The start of a new year is a very natural time to increase your prices if that is necessary. Okay, now let's talk about some tax tips that you can take on the personal side or for your personal tax situation. Now, these tips will not apply to everyone, and I do recommend that you speak with your tax advisor for complete details on any one of these tips or strategies. So let's go ahead and jump in. First, maximize your education tax credits if applicable. If you are going to qualify for the American Opportunity or Lifetime Learning Education credit, check to see how much you will have paid in qualified tuition and related expenses for 2016. If you're not at the maximum amount allowed for computing the credits, you can actually prepay your 2017 tuition as long as it's for an academic period beginning in the first 3 months of 2017. This will allow you to increase your credit for 2016, although if you're expecting the credit in 2017 as well, it would reduce that year's credit. This technique can be especially helpful if you have a dependent who is a student, or if you are a student that started college for the first semester in the fall. Next, Roth IRA conversions. If your income for 2016 is unusually low and you have a traditional IRA, you may wish to consider converting some or all of that into a Roth IRA. The lower income that you've earned this year results in a lower tax rate, which provides you with a great opportunity to convert to the Roth IRA and pay the minimum amount of taxes possible. For any of you out there who are over 70 and a half years of age, don't forget that you need to take a minimum required distribution. So if you haven't taken that for 2016, from your IRA or your qualified retirement plan, you need to do that before December 31st to avoid any penalties that would be assessed in 2017. As a reminder, if you turned 70 and a half this year, then you can delay your 2016 distribution until the first quarter of 2017. But that will mean that you'll have a double distribution in 2017 that will be taxed. Keep that in mind. Next, you can advance your charitable deductions. So if you regularly tithe at a house of worship, or if you make pledges to a qualified charity, you might consider a prepayment for part or all of your 2017 tithing or pledge, and that effectively advances the deduction into 2016. This is going to be especially helpful for individuals who marginally itemize their deductions. What that means is that in one year they will take their standard deduction, and then the next year they will itemize. And so the goal with that is to, in the year of itemization, put as many deductible expenses or incur those in that year. So if you advance your charitable contributions, then you can take all of your 2016 and 2017 charitable contributions in 2016. Again, for our older taxpayers, if you're over 70 and a half, you can take advantage of the direct IRA to charity transfer, and that counts as your required minimum distribution, and it may even reduce the taxes on your Social Security income. Okay, next, maximize your health savings account contributions. If you have a health savings account, or if you just signed up for a new insurance plan and it's a high deductible plan and that allows you to have a health insurance account, even if you just signed up in December as your first month of having the account and the new insurance, you can make a full year's worth of deductible health savings account contributions, which is a great way to lower your taxable income. So, next, prepay your taxes. Not all taxes are tax deductible, but state income and property taxes are deductible for taxpayers who itemize their deductions and who are not subject to the alternative minimum tax. So prepaying these taxes advances the deduction onto the 2016 return. So if you expect to owe state income tax, it may be appropriate to increase your state withholding tax at the place of employment you have, or if you're self-employed, to make an estimated tax payment before the close of 2016. And if you're paying real property taxes in installments, pay your next installment before the end of this year. Medical expenses. So for those of you who have high medical or dental bills, it may be beneficial for you to pay any balance you owe on those bills before the end of the year. Keep in mind that for most taxpayers, there is a 10% of adjusted gross income floor. So you may want to make sure before you go and pay all those bills that you have hit that 10% or are going to hit that 10%, and it's going to be worth it for you to do that. Just so you know, you can use a credit card to pay the expenses. But if you won't be paying off the full balance of the card, only do so if the interest expense on the card is less than the tax savings. So don't incur a bunch of interest expense on credit cards to try to get some tax savings if the interest rate you will be charged is going to exceed your tax savings. Okay, the annual gift tax exemption. As a reminder, you can give $14,000 to each of an unlimited number of individuals without paying gift taxes each year. So you may want to take advantage of doing that. Keep in mind that you can't carry over unused amounts from one year to the next. So if you give $10,000 to your grandson this year, that doesn't up your annual gift tax exemption to $18,000 next year. It's going to be $14,000. So feel free to max that out this year if you can. And then finally, you want to avoid underpayment penalties. If you know that you're going to owe taxes for 2016, then you can take steps before year ends to avoid or minimize the underpayment penalty. The penalty is applied quarterly, so making a fourth quarter estimated tax payment will only reduce the fourth quarter penalty. However, withholding is treated as paid ratably through the whole year. So if you increase your withholding at the end of the year, this can reduce the penalties for any earlier quarters that you missed or didn't meet the required quarterly tax payment. So get those penalties down as much as you can while you still have time to do so. Okay, so that's a pretty good list of some year-end tax planning tips for businesses and for individuals. If you have any specific questions on any of these or additional tax-saving tips or strategies, please feel free to reach out to us. You can click here to schedule a free, no obligation consultation. Also, be sure to sign up for our monthly newsletter and subscribe to our YouTube channel for weekly updates. And if you have a tax question that you'd like us to answer, please leave it in the comments below.